What are we seeing in terms of China?
Well, it is the biggest importer of oil, so it has a major impact, its demand factor on the price of oil. And the latest thing we're hearing from analysts is that the economic woes are not doing much to help boost demand beyond what we've already seen. And analyst commentary says that China's appetite for fuels and other oil-derived products may already have peaked for the year. And so many analysts are now revising their outlook. While recent headline numbers for crude imports point to robust oil demand for China, much of that supply, the analysts say, has actually been stockpiled or stored rather than turned into gas and diesel-related products. China's crude stockpiles, in fact, have risen to a record high in recent months. So the economic recovery continues to show strains, and analysts say there's not much room for growth left in the second half. An analyst at FGE expects Chinese oil demand growth will slow to 1.1 million barrels a day over the second half of the year. That compares with 1.3 million barrels a day in the first half. And another analyst with Energy Aspect says it's likely that China's oil demand already peaked at 16.4 million barrels a day in the second quarter. Oil bulls moving back into the market, according to Citigroup's Ed Morse, have got it wrong. He recently, we're talking about Ed Morse here, a widely followed analyst, pointed out the world is still waiting for a, quote, real Chinese recovery. He points out Europe is in recession. We still don't know if the U.S. is going to have a soft landing. All of this, he says, makes the fundamentals in the crude oil market very fragile, at least for now.
And meanwhile, these OPEC Plus output cuts are starting to take effect.
Yeah, they are starting to take effect when you see the price of West Texas Intermediate at 82, and we already know that Brent crude is trading near 85, close to 86. OPEC's crude production fell by the most in 3 years, and this is as the Saudis have imposed a far deeper cutback. A Bloomberg survey shows OPEC Plus crude production tumbled by 900,000 barrels a day in July. That, by the way, is the biggest reduction since the group and its allies slashed supplies during the depths of the COVID pandemic back in 2020. Most of those production cuts, as we've said, have come from the Saudis, and traders expect Saudi Arabia to extend that measure into September in the coming days. As Sherry mentioned, also, Bloomberg has learned that the Biden administration is now delaying replenishment of the emergency oil reserves, and that has very much to do with the fact that oil is now at a very high price, above $80. Obviously, if they're going to be doing a lot more buying, they'd ideally get that at a lower price. Again, very fragile in terms of fundamentals right now.